Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views.
Morning, Wednesday, July 6, 2022. Okay, Treasury's still bid out there, and that's kind of what's calling the shots right now. You got a 10-year, it's moved well past 3% to the downside in terms of yield. Now 2.76 this morning. We are along the longer dated stuff. We're along the TLT. I think I've shared that with you a few times. The thesis was that worries would migrate from inflation to recession. That looks like that has happened. And yeah, so it continues to be the narrative this morning. So we saw an impressive move yesterday in the market in terms of everything was red, slowly recovered throughout the morning to the point where the NASDAQ actually went not just positive, but up 1.75%. Now, mind you, that was full of every ship risen by, this tide, so to say. So not only you had the not so well capitalized stuff to the reasonably valued, competitive mode, strong balance sheet stuff, all up, and that may be the narrative for the next week. 7/13 we get CPI. That's the next big release. Earnings season isn't really starting yet. That's later this month, and for us, this is something you want to try to play in terms of a trade or in terms of nibbling on positions that you plan on adding to later, potentially lower. We talked about not so much doing the cyclical thing right now. We are not buyers of cyclicals at this point, thinking that there is more to go to the downside in those groups. Really the most at risk in terms of estimate revisions. However, secular growth, what we're calling mission critical type companies, those can be bought to participate in what's going on right now. In my opinion, cybersecurity fits the bill by all means. I think first and foremost in that mission critical deal. There's no company that's going to go out there, and I don't think they're going to spend less on their cybersecurity unless they've already done a massive upgrade or their income statement is just completely falling apart. So that being said, favorites over here, CrowdStrike, Zscaler, Palo Alto Networks is the cheapest. It's the most reasonably valued. You actually can put a PE on that thing. Most of the other ones you can't. It's still multiple sales you're talking about. But all these stocks seem to, for now anyway, have bottomed back in May. They didn't go down to the extent the S&P did. The S&P made new lows in June. The cybersecurity stocks did not. So they've shown some resilience. They are making higher lows, which is a positive. And Palo Alto, speaking of that one, if you are thinking about that one as a long, I think you might as well wait and see if you can recapture that 200-day moving average at 526, because it has not been able to do so yet. It bumps its head up on there and gets knocked back down every time. So that's the move. If that's something you're interested in playing, I think that can work. Outside of that, have an awesome day. We will talk to you tomorrow.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.